Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Very interesting couple weeks for sure since we last spoke.
Mike, it seems like a full-out trade war has now been declared by the U.S. on China with tariffs on everything Chinese. How much damage will that do, or is this all talk again, and will there be much fallout from it?
Well, I just want to speak specifically to the financial markets as far as what impact this will have. I mean, it's not going to be good for farmers and eventually may not be good for people shopping at Walmart, and consumer goods are likely to go up because so much it does in fact come from China. But there's a couple things I'd like to point out to people when it comes to the financial markets. First of all, I think over the past week, what people are experiencing are big swings up and down in the market, obviously, but it's being attributed to the news bite of the day. One day, there's seemingly hopes that there'll be a resolution to this, because one thing that is happening is that these tariffs that Trump announced on Friday aren't going to even begin for another couple weeks. The Chinese ones won't even start to come online until June the 1st. So, in theory, there is a window open for negotiations to forestall these tariffs, which will mean a real trade war. So people are looking for signs of hope at times, buying on that, and then, there'll be a tweet, a comment, that may negate that from Trump or even from China. So people, I think, are getting whipsawed mentally, that are really engaging on this, very closely, and I don't think they should do that, because on one hand, I think it should be said that last year, this all began in June, and the stock market went up from June till the end of September. So tariffs in themselves don't necessarily mean that the stock market's going to drop, because when this began, the stock market went up for several months regardless. Now, all that said, what I think people should do is pay attention to the charts and the trends and make their decisions based on that. And when it comes to that, when we last spoke, it was the week that the Federal Reserve met, and I pointed out in the conversation that the stock market was extremely overbought. On the RSI indicator, for example, it reached a level on the NASDAQ not seen in over a year. And the same thing was happening with the S&P 500. And the last time the markets actually were that overbought was it was in January 2018, and the stock market pulled back 10%. That's when the VIX, spiked up, went crazy, and just all been forgotten about, because then we had the 20% drop in the fall. But the point is, we were extremely overbought anyway going into this month, and when markets are so overbought, the thing you can expect them to do is to go sideways, and work off that condition, or correct and pull back. And when that happens, typically you can get a 10% decline, and a spike in the VIX up to 30. That's a fear indicator in the options market. And to me, that appears to be how the market is trading out, regardless of what the news is. And if that's the case, then this decline probably isn't even over yet. We're probably halfway through it. And for most people, I don't think that means they should go into a panic, because a 10% decline in the stock market really isn't that big of a deal. And I think people should just be patient, let it play out. And if they want to buy into the U.S. stock market, wait for that. Or, other sectors they're favoring, like marijuana stocks, for example, utility stocks, so forth. Just wait, let it play out, and then buy. And do not buy because you see some guy on TV saying a tweet came out, or there's a rumor about a resolution to this trade situation, because frankly, it doesn't look like it's going to be resolved. And if it's not going to be resolved, the end game of that is going to be 3-4 weeks out. So we can just wait 3 or 4 weeks out. If it's going to be bad news, no resolution, then that'll, hit the markets 3 or 4 weeks and be factored in. And the bad news will be factored in. Then you can look for a counter trend rally back up. So I think that's what people should do. Just wait out this month if they're trading the U.S. stock market. Now, that said, I do think there's opportunities to actually make money, because there are things bucking this trend of the U.S. stock market, and gold in particular is coming alive. And I think that's something people should really be a part of and get involved in if they haven't already, and not wait. Just get on now.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, some oil tankers reportedly under attack in the Strait of Hormuz. All this war talk with Iran, yet it doesn't seem to really have affected oil prices yet. Is this more appearance than substance? And is it really a threat to the oil market?
We really don't know, because all the information we have is there is an attack, and we have no details about it at all. And we're just trusting statements from the Trump administration and John Bolton in particular, that Iran is somehow responsible for this. And if you know history, or the listeners do, I mean, in 1964, supposedly the Vietnamese, the people of North Vietnam, attacked an American destroyer 2 times, and the second time didn't happen. And we can't really trust John Bolton, who's Trump's national security advisor, because he's talked about wanting war with Iran no matter what almost, and was a key player in the Iraq, or the lead up to the war in Iraq, of the so-called weapons that Saddam had, and really pushing for it. And he's done the same in Venezuela, and even Trump made statements that he's gone overboard, Bolton, with Venezuela. So it's really strange, situation. And, I don't really think, we're going to have this giant war with Iran. It seems to be more part of a pressure campaign. And also, last month, the United States did announce a full embargo on Iran's oil, and that helped the oil market go up a little bit. But Saudi Arabia and Russia talked about coming into the market to basically steal their market share and take their place. So I think that's what would really happen if there's more tensions. I think people are looking to profit from that one way or the other, and some people will be stepping in to the oil market to take advantage, or even keep the prices where they are now. So I don't really think we're looking at a giant threat there, really, at this point.
Well, there's also a lot of oil available. It seems to me they just need to turn on the taps almost in Texas when it comes to fracking.
Well, that's a big reason why the prices aren't likely to go up, or at least to put it this way, the Saudis don't want the prices to go up beyond $70 a barrel, because if it does, that's exactly what will happen. Those fracking companies will come online and start to steal their market share. And we saw what happened, how, they went through that, the Saudis flooded the market in 2014 to cause the prices to crash, and that hurt them. It made them lose less money, but they felt it necessary to do that to make our fracking companies turn off, and some of them go bankrupt. And so they don't. I think they want stable oil prices and not the prices going up, because then they'll have to go through this cycle again. So that's the main reason I don't really think we are immediate threat of seeing a big spike in oil prices.
One thing I'm thinking about here with China and U.S. trade is that China is the source of a lot of rare earths that are needed for defensive products like armor plate and so on. How do you squeeze China out of the picture totally and not hurt your own defense?
Well, that's a good question. and to me, questions like that tell me that this isn't completely well thought through. But part of the answer is probably a scramble to get control of more of these resources in Africa. There's both China and the United States are kind of in a competition in Africa to do just that. And the U.S. has been putting small military bases in various African countries, and China has been investing there too. So I think that's a long-term game that both countries are involved in.
It sounds just like the 1800s all over again. Everybody trying to divvy up Africa. Yeah,
it really does. And even the French are involved in Africa too, just like the 1800s. So it's something else, but hopefully this won't, result in what happened as a result of those, colony grabbing operations back then, and that was war, So hopefully that doesn't. I don't think that's going to happen, but that's what happened in the 1800s.
We'll have more with Mike Swanson right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, there's an ad campaign on right now by a particular trading company that wants to see you get rid of your old, clunky, heavy dinosaur gold and trade it in on light, airy, transportable Bitcoin. Is that a good move?
No, that's a crazy thing for people to do. First of all, I had someone email me about Bitcoin this morning because it's gone back up to 8,000, and they're very excited because they think that could be breaking out of a long-term base and starting a big move. And they asked me what's my opinion. And I basically have no interest in cryptocurrency, and it's possible that it does go up more. It could go to 10,000. I don't know. But it's not a real investment. It's only useful as speculation, meaning you can make money in it if it goes up, but you can lose money too. But it has no real function as money itself. It can't be used as money because every time you use Bitcoin, you got to pay like $30, and it's not a store of value because it's so volatile. and the futures market actually stopped trading in it because no one was doing it. The market became, it ceased to exist, basically. So if someone is just purely into speculation, maybe Bitcoin is better for the next couple of days, but it doesn't pay a dividend. It doesn't own anything. It's not like a stock where you have ownership in a company or can get a dividend. And it's not gold, because gold does function as a store of value, and it has throughout human history. Silver has also, because they're not so volatile. They're stable. Yeah, they can go up and down, but they don't do it like Bitcoin does. And they kind of act as so-called real money, so to speak. But another reason I think it's a big mistake is that, as I said, I have no idea what Bitcoin's going to do next week, even next month. But over the next couple of years, I think it's going to continue to go down in value, because I think its natural value is zero. While gold, I believe, is in a long-term bull market that really started in the beginning of 2016, and it's had its ups and downs. It recently went up to 1350, and it's pulled back down off that level, down towards 1270. And it looks to me like it's broken that correction by closing above 1300 yesterday. It broke a downtrend resistance line, and I think either way, we're in a trading range between 1350 and 1270, and ultimately gold will benefit when the Fed lowers interest rates. And now there's the Fed Fund Futures market has a 75% chance of the Fed lowering rates before the end of the year because of the recent decline in the stock market and the economic consequences of tariffs. And gold will benefit from that. And just this month, gold is starting to act better than the U.S. stock market is on a relative strength basis. And the last time it began to do that was back in October. So if the stock market declines, expect gold to go up, like it did from October to January last year. And if the Fed lowers interest rates, you can expect gold to go up. And when the Fed does lower interest rates, it'll begin a new dovish cycle that will likely last for years, and gold will benefit from that. So we have fundamental reasons to believe gold will go up over the next couple of years, and I think we have a buy point here in this range to benefit for a window of at least a couple of years where we can make money in gold and mining stocks, and that's why in the first couple of minutes I said people should be buying that and not even waiting for the stock market to have a washout or something with this, what I think is a correction. Just get involved now if you're not. And Bitcoin, it can go up for a couple of weeks, but it's not going to go up for a couple of years. And last year, when the stock market fell from October to December or January, it showed us that so much of the claims made about Bitcoin are completely false, such as the claim that it can act as a safe haven against financial turmoil in the markets, or that it can go up when the dollar goes down. And it can actually supplant gold or displace gold and displace the dollar. All those things proved out to be completely false because last year Bitcoin went down when the stock market went down from October, November, and December, and gold went up, proving that Bitcoin is nothing but speculation. It's not a safe haven, and that's the biggest hoax I've ever seen. Before that, maybe the biggest hoax was the idea that real estate can go up forever and never pull back. We saw what happened in 2006 when real estate peaked out, or that some of these various internet stocks were great investments in 1999. Some of them turned out to be like Amazon, I don't know, Google wasn't even around then, but Amazon certainly was, eBay. But many of them, went bankrupt. But at least these were companies that you were buying into, and the prospects of them dictated bankruptcy or survival. With Bitcoin, you're just betting on pure speculation, but people, price action gets people excited. We're at 8,000. And some people are jumping in on that. gold's not at 1350 yet. If gold goes through 1350 before the end of this year, and I think it will, then you'll start to see people get excited about it like they are some with Bitcoin right now, because so many people in these markets only chase when, you get the good investment buy points. Few people want to get involved in that. So that's where I think we are with gold. And maybe, for people in the stock market, we saw one in December, in hindsight, and maybe we'll get something similar as far as a panic event, next month, like we saw in February of last year when the VIX went above 30.
Also, too, we have cryptocurrencies that exist perhaps at the pleasure of governments, because on May 7th, China officially banned the mining of cryptocurrencies. Now, whether they'll enforce that ban or not, we don't know. But other countries have also put restrictions on cryptocurrencies. That could happen any minute.
Oh, for sure. And, there was a notion that this stuff was going to become mainstream. And, there'd be exchange traded funds for it that we could use if we want to go long or short. But that was dependent on the futures market developing, and it failed. And without that, there's no real big financial interest for Wall Street banks and institutions, to get involved in this. So without them, it's hard for this to really develop into a mature, viable, market. I mean, for example, in the futures market, we can trade oil, we can trade corn, and on and on and on. And because of that, we can use ETFs on them. But with Bitcoin, no. And it seems like every month there's still a scandal of some exchange somewhere that gets hacked and money stolen and so forth. And to me, it's like gambling, like playing online poker or something. You can make an account to gamble on online poker or sports betting or something if you want to. But I had an online poker account, and the money got stolen, So that's what you got to face if you want to get into gray markets, so to speak.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you again.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.